your forecast is actually, it's just like a tick above the consensus. What are you expecting? Obviously expecting it to be slightly hotter, but what are you expecting when we dig deeper in this report when it comes to things like shelter, motor vehicle insurance, some of the things that have really been pushing this higher?
Right. So we have core CPI inflation rounding down to 0.2%. As you said, maybe just a little bit stronger than consensus. In terms of the details of the report, we think core goods prices continue to fall. That's good news. We also have housing inflation just sticking a little bit lower than it was last month. That's really important for the Fed because it's very, very inertial. So as it moves down, they can have confidence that it will remain low. And then the third component, the third big component of core inflation would be core services outside of housing. There, we were actually down in terms of price levels last month. That's very unusual. There were a lot of idiosyncratic factors driving that, but we don't think that lasts. So this month, we expect a small increase.
Okay. How do you see, if it comes in line, how do you see the Fed reading this inflation report? We always say PCE is their preferred gauge, but CPI is certainly important. It's also more focused on cities and urban areas.
Yeah, so CPI gets more attention. I think it's more widely viewed and it's in the press, right? It's also what drives break-even inflation in markets, but PCE is what the Fed targets. And the differences between the two really show in that last component that I talked about, which is core services outside of housing, right? So there, I think you really want to think about which components go into the PCE rather than the CPI. But look, if you get a CPI report that's consistent with what we're expecting, then I think the Fed will say, okay, this is another step in the right direction.
Is the right direction a cut in September in your mind?
We still think the Fed only starts cutting in December. The risks of a September cut are rising and will continue to rise if you get a softer inflation print, but also because the economic data have cooled down. And that's something that Chair Powell talked about in Congress as well.
All right, a couple things I want to talk to you about. First, the sticky inflation. You kind of hit on it, but again, energy up 4% year over year, food up 2%, car insurance up 20%. How do those pressures ease long term? It just seems almost impossible because, especially when it comes to car insurance, once the rates go up, what's really going to lead them to go back down? Food, the same thing. We're all continuing to eat, and there's a housing shortage.
Right. So the Fed doesn't target price levels.
Yeah.
It targets inflation, right? So if there is a one-off shift up in price levels, the Fed isn't going to try and bring those prices back down because in order to do so, they would just have to inflict too much pain on the economy. So auto insurance prices could remain elevated, but inflation could cool off in coming months. And the other thing worth noting is that auto insurance in CPI is not what goes into the PCE.
All right, interesting detail there. One other thing that I think we have to talk about is oil. So over in Europe, the Fed's counterparts in the ECB very concerned about a rise in oil prices, saying that's a big factor in their decision. We have seen a rise in oil prices over the last month here in the U.S. as well, actually globally. How does the Fed view that? Are they worried about the inflationary impact of that? Looking over the last month, WTI crude up over 5%.
The Fed is more focused on core inflation, which excludes energy prices. They will look at energy prices if it's a large increase and they think it's likely to be sustained.
Is 5% a large increase?
It's moderately large. Energy prices are more volatile than other prices, which is another reason to focus on the core. As far as the last month goes, though, actually, energy prices were down.
Right.
And that's why we expect headline CPI to come in softer than core CPI.
But what about that trend? I mean, do they look at things like a trend when it comes to oil prices or food prices or motor vehicle insurance, just the upward trend?
Again, they would look at strong inflation. They wouldn't look at the upward trend in price levels as much because that's something that they treat bygones as bygones.
Okay.
But with energy prices, with food prices, certainly their official mandate is headline inflation, right? So they do have to be concerned about those. They affect the cost of living. But when it comes to, which parts of inflation are more forecastable, more in the control of the Fed, it would be the core rather than headline.